Okay, let's pull back the curtain on something you use every single day, but maybe don't fully get: your bank. We're going to dive into how it really works, and more importantly, how the money in your account becomes part of this massive profit engine that you probably never even see.
For most of us, when we think about our bank, the picture in our heads is pretty simple. It's a place for our money. Seems straightforward, right?
The idea basically goes like this. You get paid, you put the money in the bank, and the bank just acts like a super secure wallet. It holds onto your funds until you need them. Simple as that. But what if that's just, the cover of the book? What if that simple, safe feeling is actually the entry point to something way, way bigger? Because, well, that's exactly what it is. Behind the scenes, there's this huge, complicated system humming along. And the wildest part, it doesn't need you to do anything special or unusual. It's built to run on the financial moves you make every single day without a second thought.
All right, so first, let's just tear down a really common misunderstanding. I like to call it the myth of the vault. It's all about what we imagine is happening to our cash the second we hand it over to the teller.
We have this image in our heads of our money being stacked neatly in some giant, secure vault, almost like it's in a personal little safe deposit box. It's just sitting there, patiently waiting for us. It feels safe, it feels static, it feels secure.
But here is the absolute key. That is not what's happening. Not even close. Your money isn't sitting still. From the moment it hits the banking system, it's active, it's moving, it's being put to work.
And that brings us to what its real job is inside the bank. So, let's talk about your money's secret job and how your simple deposit gets turned into a really valuable product for the bank.
See, this is where we have to totally redefine what a deposit even is. It's not just storage. For a bank, your deposit is a crucial asset. It's the raw material they need to generate revenue.
And here's exactly how they do it. It's a cycle. You deposit your cash. By law, the bank has to keep a tiny fraction of that on hand. That's the reserve. But the rest of it, the vast majority, gets loaned out to other customers for things like mortgages, car loans, you name it. The bank then charges interest on all those loans, and that becomes its #1 source of profit. This is the absolute core of the business model. The bank might pay you a tiny, tiny percentage of interest on the money in your savings account, but then it turns around and charges borrowers a much, much higher interest rate on loans that it makes using your money. That gap, the difference between what it pays you and what it earns from borrowers, is called the interest rate spread, and it's basically pure profit for the bank. Now you might be thinking, one loan doesn't sound like a huge deal. But what makes this system so incredibly powerful is scale. This isn't just happening once. This cycle is happening millions of times a day, across millions of customers. All those small percentages, when you multiply them across a massive number of transactions, add up to an unbelievable amount of money.
But that interest spread isn't the only way banks make money. Oh no. There are other more subtle profit centers, these little invisible engines of revenue.
You've definitely seen these before. Things like monthly account service fees, fees for using an ATM that isn't theirs, those really painful overdraft charges, or the penalty for a late payment on a credit card. They are just woven into the whole experience.
The real trick with these fees is that, one by one, they feel small enough that you might just ignore them. A few dollars here, a few there. But just like with interest, it's all about scale. When you add up every one of those little charges from millions of people, they become a huge, incredibly reliable stream of income for the bank. Okay, and here's another one that's super subtle. It's called the float. When you send a payment, the money doesn't just zap over instantly. There's a delay, right? Maybe a few hours, sometimes a few days, where that money is in transit. During that little window, the money has left your account, but it hasn't landed in its destination yet. And for that brief time, it's still in the system, still being used, and still generating value. So when you start putting all of these pieces together, the lending interest, that constant trickle of fees, the value from the float, a much bigger picture starts to come into focus. So let's talk about why the system absolutely needs you and how your completely normal behavior is the fuel that keeps this whole thing going.
Here's the most critical thing to understand. The banking system isn't really built around financial disaster or you making a big mistake. Actually, it works best when everything is stable and predictable. All it really needs from you is for you to show up and participate.
This quote just hits the nail on the head. The entire structure is engineered to make money from the predictable, boring financial patterns of millions of us just living our lives. That's not a bug, it's the feature. It's the whole design.
I mean, really think about it. You deposit your paycheck, boom, you've just handed over the raw materials.
You swipe your card to buy groceries, boom, you're generating transaction fees. You take out a loan for a house, boom, that's interest income for years. Every single one of these completely normal, necessary actions is a moment where the system creates value for itself.
And this is what makes it all so incredibly effective. None of this feels sinister or weird. It just feels like life, paying bills, buying stuff, saving for the future. And because it's so perfectly woven into the fabric of our society, we rarely even stop to question the mechanics of it all.
So, I'll just leave you with this question. Now that you can see the blueprint a little more clearly, the lending, the fees, the way it all runs on your everyday behavior, what do you see differently when you look at your own financial life?